just before we begin this video, I just want to say that everything in this is to do about the hybrid system. And if you don't, obviously, for those who don't know, I will be doing videos which will turn into a series on how you guys can use what I use to make profit in the charts and so on. But for now, for the demonstration of the video, we're just going to get straight in. I will still be explaining it so that it's easy to understand. But once you use the indicators that I use, and once you guys stick around long enough to learn the methods that I'm using, I'm sure you guys will make a killing. Alright, so let's get into it. Alright, so here we have a W formation. Now, looking at this on the charts, it doesn't really tell us much, but it's more so a psychological pattern. Now, when it comes to patterns themselves, they don't really exist. It's just the way the order book fills over time when orders come in and orders are filled and whatnot. But there is a psychological behavior to what happens at this point in the chart. So the places you're going to see W formations is when they come from a downtrend. Likewise, with an M formation, you're going to see them when they come from an uptrend. So that's when I capitalize on them the most, right? So what actually happens in the W? So when price is moving down, traders are going short because they see the move down and then they think it could go down so much more. But then the market makers reverse price and then they got stopped out because they set their stop loss too tight, and then they're like, bummer, got it wrong. But then price tests the same level again, inducing the same traders that went short here to go short again, thinking that, they just had it wrong. But in reality, they didn't. They just got caught on the wrong side of the trade. And then price ultimately makes the move out and shifts out the zone. You would also call this point here your period of consolidation before price then finds value elsewhere. The thing we want to see the most when it comes to W formations is the shifting out the zone, the retrace, and the continuation. It's this bit here in the pattern. If I just draw it right here, it's this bit in the pattern that we want to see happen from the W formation, and that's going to be starting the uptrend. Now, just drawing your attention to this part in the chart, we can clearly see that we've got a W formation. Price comes down, comes up, comes down again, and then aggressively shifts out the zone, comes up, retraces, and now we're looking for the continuation. So now referring back to the start when we were on about the pattern and the psychological behavior, in this indicator we can see the vector candles, which are the colored candles, which you can see green, blue, red, and violet. These are vector candles and they signify significant volume coming into the chart but displayed in a candle, and they tell us the manipulation of the market makers. It's basically the big banks, the institutions, that can create vector candles because a certain exceeded volume was exchanged at this point. I know that might have been a bit confusing, but you can see the aggressive move down, they come up, all of this part here, these grey candles, was retail getting in on the action, and then they do it once more, hit the same level. The traders that got caught out here attempted it once more, but their market makers ultimately reversed priced and then shifted out the zone. So to give you guys more context as to why I took the trade, I'm going to bring in the sessions. So this green box represents the Asian session, and just for extra context, the red box is, and it's currently forming, is the New York session. But we're not paying attention to the New York session right now, we're paying attention to Asia. So on the chart right here, I've just marked off Asian low. Let me just get rid of that. You can see how they swept the Asian session low, came back up, tested the same level again, but shifted straight back out. That was showing me there was no more intention of marking lower prices. Likewise, we can see that we just come from an uptrend and now we're starting to break down. This is what we're looking for here. Drop, retrace, continuation. Given that we're in a downtrend now, we're looking for one more retrace and then a final continuation. So this W formation actually added onto the confluence as to the retrace higher, and now it would be at this point where you'd be looking for shorts for the continuation for price to go lower. Now back to the point of W formations being variable, you would consider this a W formation because ultimately they came down, came up, came back down to the same zone, tested it by the wick, and then ultimately shifted out, which led to a rise, retrace, continuation. Now here's another W formation, but what do you notice? So this was last week's Monday Asian session. You see how they came back into it, W formation, they test the same zone which they started the week from, they shift out. You get your drop, retrace, continuation, W formation. They always appear after the cycle is done, after the cycle is finished, and then they lead to the reversal of price. Price then continues higher. Just to touch on something real quick, not every single W formation that you see forming in the chart is going to work out. Some patterns will fail, but I'm going to leave that for another video. Just to touch on it real quick, there's always going to be patterns within patterns and cycles within cycles. So one W formation could just be the start to the breakdown of a level or a cycle, but we can dive into that later on. But by now, guys, you should now be familiar on how the W formations work and the psychology behind them and how they induce traders to react and do something. Now this next part, which I'm going to wrap it up here and leave you guys with this, but I want to go over multi-sessional cycles and levels, rises, retraces, and continuations. So this was a multi-sessional W formation. You can see it formed over 1, 2, 3, 4, 5, 6, 7 days. They came down, got everyone committed short, came up, came back down, and then the variability to the W formation came into play. They didn't come all the way down, but then they shifted out. Likewise, right here, rise, retrace, continuation. Retrace, continuation. So now we're just paying attention to how price is going to react here. Is this going to form the M formation, peak formation, and then drop? Or is it going to be the retrace and then continuation out the zone? But leaving you guys with that, we'll get into it. We'll get into breaking down that stuff at another point. So guys, I'm going to end it there. I really do hope this taught you guys something about the patterns and the psychological behavior behind them and how they form in the charts and how to trade them. Leaving it that, we'll dive into more stuff later. If you have any questions about the indicator, I'll leave it linked in the description below. And yeah, that's it guys. Thanks for watching.